And good evening, everyone. Welcome to Saturday Night Live and Rambling. I'm Clay,
Hi
joined
there.
by the not as yet dead E Train. She's
What?
choking on her food.
Oh, I was just, yeah, you made me laugh.
Sorry about that.
That
Humble
happens on occasion.
apologies.
Nah, whatever.
So it's good to be with y'all tonight. Good to see you on a Saturday night. Um, been an interesting week in the market, in the political circles, in the economy. So look forward to talking about some of that as we cover tariffs and not so fair trade.
All right, X is still working.
X is still working. For those of you who are listening in on Rumble or X, feel free to ask any questions, throw out any comments you've got.
Chat
If they
away.
don't show up in our feed, E-Train is monitoring both and will forward them. For those of you on YouTube, glad to have you. We've got members of the family on, I think, all three different streaming services. So
Mhm.
good to be with y'all tonight. Hope you've had a good half of the weekend so far. Hope all your favorite teams are winning.
I
Speaking of
was
which,
actually, yeah, and Auburn is doing its thing. I was actually at an engagement party earlier today.
engagement as in like wedding.
Like a friend of mine here, his son proposed today, and so there was we did a party thing, food and all the friends and all that stuff.
To
Yes,
try
so
to
that
talk them
was
out of it.
not today. That would be rude.
Uh,
Hey, Jane.
hey Jane, how are you doing? Good to see you. Um, yeah, marriage. What's the next time? Whenever I think about getting married again, I just find a girl I can't stand and buy her a house.
You're
Save the legal fees.
a mess. I just about snorted on that one. Sorry.
What else is going on?
Tariffs.
Been trying to clean up and do laundry around here, so it's been relatively boring.
Well, that'll
No real
take
news.
6 days.
Yeah. Do what?
That'll take 6 days to get your laundry done.
Take longer than that. Yeah. That's kind of an inside joke for those of you that haven't watched regularly. I hate my washer and dryer, and Ellen just bought a new set that she is still
Speed
modestly
Queen.
proud of.
Love. No, no, you're just modestly jealous of
I'm
because
extremely jealous. Not even going to try to hide it. I absolutely hate it.
your
But
dryer doesn't work.
yeah, I'm thinking of putting the house up for sale and moving. So I don't want to buy a new washer and dryer and have to move them and all. I'm going to take a sledgehammer to mine the day I sell it and move. Work out some of my years of frustrations with them.
And he didn't think that I would get the black one, and he's like, "You even got black."
I know. She did it just to spite me. I know her.
I didn't know. I did not know what color you wanted,
I mean,
but it is kind of funny.
yeah. But she asked me what type I would get or whatever, and then she looked into them and all and came to the same decision and ended up buying one. And now I'm just extremely jealous because mine sucks, particularly the dryer.
I get
Hey,
a text. Hey, Melissa.
we'll be in the
I
car for a while, listening but can't chat. We'll
That's all
get
right.
your happy anatomy home so you can chat. Drive
There
safe.
you go.
By all
Yes.
means, drive safe. Leave the washer and dryer for the people that bought the house. Let them deal with that.
Oh, he will.
I would. They'll have a few dents in it, but I'll leave them.
I get I get text messages every time Clay does laundry, telling me how much he hates me. It's great. Love it.
So anyway,
Speed Queens, they're great. Love it. Love it. Especially the 7 series. Go for it. Spend the money.
Yeah, it will be the last washer and dryer. I don't care how young you are, to be the last washer and dryer you ever have to buy.
Mhm.
So they do cost a little bit more, but having sets that work is a huge advantage in life compared to having sets that don't work. Jane, family, I have a crappy washer and dryer too. So yeah, mine's, and when I bought it, I tried to do a little research, buy a good brand, Maytag. No, just no, just
Like, I like to text him when I'm done 6 loads in a day. He just wants to shoot me.
I did a load of towels with a couple of sheets in it. My dryer it has an auto dry setting that just doesn't work. Like very dry on the setting is still kind of sopping wet when it completes. So you run it on that, it runs for 2 hours, still wet. Set it, for 70 minutes, run it, still wet. Set it for another 40, still damp, and run it 30 minutes. And I've checked the heating coil, I've checked the vent, the airflow, everything. Everything seems to be in good working order.
I can remove the back from the dryer and cleaned the back of his dryer out and everything up in it, and it just sucks.
Doesn't help. Yeah, it just doesn't help.
Mm-mm.
And it's 3 years old, 4 years old.
Something like that.
So anyway, if y'all have any suggestions, recommendations, throw them out. This is
Jane
obviously
does.
an issue with me.
Jane does. Just
Yeah,
hang
it's
them.
faster to hang my clothes up to dry. Only, yeah. I don't think my HOA would be happy with that at all.
You could hang them inside. You could just run lines.
Yeah, maybe that's what I ought to do.
Mm-hmm.
Anyway. All right.
Oh, that gives me such
Tonight,
joy.
yeah, speaking of joy, it's been a joyous week in the market with
Ugh.
tariffs and the economy. Oh, wait. The Final Four is on.
Yeah, here we go.
So just wanted y'all to make sure, understand the difference. Auburn Tigers. Tigers are the mascot, and the battle cry is War Eagle or War Damn Eagle.
I call it Tiger War Eagle thingy.
And actually, the history behind that is kind of somewhat fascinating.
And
There was
I'm
a
sure we're
Civil
going to
War
learn it.
veteran, huh?
I'm sure we're going to learn it.
30 seconds. There was a Civil War veteran that moved to Auburn after the war, and he found a baby eagle on one of the battlefields. I don't remember if it's in Tatum or which one, but he raised it, and Auburn was one of the first schools in the South to play football. And so he'd take the eagle to a football game, to football games. And, everybody want to come up, pet it or whatever. And Auburn was playing Georgia, which ended up being a huge rivalry between the two. And the eagle got free and was circling the field while the game was on. And people were going, look, the war eagle. And apparently the bird had a heart attack or something and just fell down dead.
What?
But ever since that time, the cry "War Eagle" has continued to resonate with Auburn athletics. So there you go. That's how we got the battle cry "War Eagle," even though our mascot is the Tigers, Auburn Tigers.
Drop dead?
Cool. Yep.
Even that drop dead on the field? That's awful.
How legends are
Who
born.
decides that's a good idea? Oh, that's terrible. Anyway.
Probably some damn Yankee tried to shoot it. I don't know.
Jane, I have whirlpools, and it's the same crap as you, Clay.
Yeah, you think that those two are good names, supposed to be good names, well regarded, but damned if I ever buy another one.
Speed Queen.
Yeah, I'm decided. Everybody I know that has had one or bought one is kind of like Ellen, just stupid giddy about it, in love with it. And I would personally love to be in love with my washer and dryer. After
Someday.
after battling with it for so damn long, I'm like, that is just. It sounds stupid, I know.
But when you
But
have little time to
when
do
you have to,
laundry,
yeah, and when you have to dry it repeatedly to get the damn stuff dry, and now Ellen would cram the thing full, and I'd be like, Ellen, you can only fill it like half full or whatever. It's got to have room to flip and turn. I do that. I give it room. It doesn't matter. It's still going to take forever to dry. And it's irritating as hell.
now I can take an entire load of towels and a couple sheets, like Clay said, fill the damn washer up, and they'll be dry in an hour and a half.
Yeah, it literally would take me 3 or 4 days to complete that, unless I just stood over the dryer at the moment it was over and restarted it 4 or 5 times. I'm trying to get the Amish to give me one of their older ringer washers because that will clean anything.
Yeah.
Those, the appliances made in the 50s and 60s, I'd take it any day. They just work. And I saw one of these websites that do the test talking about energy efficiency, and they took I think it was a refrigerator, an old 50s type that they got running, and compared the energy draw, the energy use on it for a day to the Energy Star compliant new refrigerator.
Mm-hmm.
And it ended up being like, I don't know, $4 or $5 a year difference in energy usage. But you're going to pay, $500, $600, $700 more for the fancy new,
Gizmos and
more
gadgets
energy
and
efficient
mm-hmm.
mechanisms. Anyway, don't get me started. I'm already started, but don't get me started.
Already got you started.
Yeah. All right. Let's talk
All I
about
have to
tariffs.
Yeah, all I have to say is I dried my clothes today in less than an hour, and Clay gets started.
I really hate you. Yeah, I'll be drying mine, and Ellen will just suddenly get a text, "I hate you," just out of nowhere. She knows exactly what's going on.
Like, how's the laundry coming?
All right, let's talk about tariffs a little bit. Kind of fairly big news for the week. The obviously a hot topic of conversation. The street, the media act like it's a new thing, which is still kind of amazing to me because Trump has been talking about tariffs for 40 years. He was on the Oprah show back in the 80s talking about tariffs.
I saw
And
that clip
tariffs,
this week.
did you? I
Mm-hmm.
thought about throwing it up, but we get enough copyright violations as it is.
True.
So I didn't think of adding to it. But you know, tariffs go all the way back to Alexander Hamilton, who first used them to help fund the federal government, and he did so successfully. By the 1800s, tariffs were generating 85-90% of all federal revenue and no income tax.
How cool is
Now,
that?
would love to have that again.
Mhm.
Now, it's a contentious issue. A lot of different opinions. We'll cover some of that tonight, but the facts that we can all pretty much agree on is that over the past, 30, 40, 50 years, the middle class has been devastated. They have never recovered from the 90,000 plants, manufacturing facilities that shut down, and the millions and millions of workers laid off over the past 30 years. Now, those with investments in finance and real estate, particularly on the coast, East and West Coast, have done well. The heartland of America, the Rust Belt, the flyover region, has all been left behind. The rest of America has been left behind. So tonight, we'll talk about this and the process of re-industrialization, both the pros and the cons of the current environment. I think it'll be fun. So let's begin. Now,
Bless you.
for the last 40 or 50 years, we've seen the lower class locked into poverty. For the first 150, 175 years of this country, the poor were generally upwardly mobile. We would maintain our level of poor with new immigration. Give me your tired, your poor, your huddled masses yearning to breathe free. So we had a steady supply of poor flooding in. And over time, they would generally improve their socioeconomic status. Poor would move into lower middle class, upper middle class, upper class. Well, for the past 40, 50 years, we haven't seen that. That's ground to a halt. And we've seen the middle class shrink. Now, the reason it shrunk is because many in the middle class have moved up. But nobody is moving into the middle class. And we've all heard the stories about how, used to could live on one income and buying a house and everything is all so much more difficult now. Well, the math, Secretary Becerra was on TV show this week, and he pointed out some of the math. And he stated that the top 10% of Americans own 88% of the stock the stock market. 10% own 88%. The next 40% owns 12% of the stock market. The bottom 50% has debt, auto loans, credit card loans, maybe a mortgage, but debt, not equity. Now, over the past year, he also went on to state that we have seen more Americans using food banks than at any time in the history. At the same time, while Americans were setting records with the numbers traveling to Europe, touring Europe. So you had a bimodal distribution where you have a large group here, historic amount, using food banks to supplement their groceries because they couldn't afford groceries. The other hump, record number of Americans going to Europe, living large, so to speak. So instead of, like a normal curve with a big middle, we've got two big humps, kind of like a double hump camel, bimodal distribution. We have created a kind of economy where a lot of families, working families, can't honestly afford groceries and need the food banks to afford enough to eat each week. Poverty has been increasing for the last 4 years, from 10.5% to 11.5% from 34 million families to 37 million families. Now, that's at the end of 2023. 24's numbers are not available yet. But with the loss of full-time jobs and housing issues, I'm willing to bet it's risen. So, what are the causes for this increase in poverty that we've seen? What are the causes for this loss of upward mobility? To understand the cure, you have to understand the problem. So, I offer one big argument was what economists have come to know as the China shock. Now,
Oh,
after
yeah.
World War II, pardon?
I said, "Oh, yeah."
After World War II, we were the big dog. Let's face it, we had pretty much bombed the hell out of the rest of the world. Nobody else could manufacture anything. We were it. So our economy boomed, factories were humming. We start preaching free trade to the rest of the world, tearing down tariffs using global treaties, the World Trade Organization. The logic was that with open markets, everybody wins. Well, by the 1990s, tariffs were down to peanuts, about 3% on average. All seems pretty well. All seems good. Then comes China. In 2001, they joined the WTO. And
The World Trade
you know,
Organization.
World Trade Organization, and damn did things change fast. It's what, I referred to as the China shock. Picture this: between 2000 and 2007, U.S. imports from China shoot up from less than $100 billion to $330 billion. That's a 230% jump in 7 years. And I mean, everything was coming from China: cheap TVs, clothes, toys,
Furniture.
furniture. Stuff just floods into the country, and American shelves can't get enough. Now, here's where it hits the Rust Belt, or what's called the Rust Belt. States like Ohio, Michigan, Indiana, Pennsylvania, states that were the industrial backbone of the country for 100 years. There's a study done by economists David Order, Dorn, Gordon Hanson, who crunched the numbers in a pretty well-known study. And they found that from 1990 to 2007, the U.S. lost about 2.5 million jobs tied just to China. Not all jobs, mind you, just the jobs specifically competing with Chinese imports. Manufacturing took it on the chin. Think of the steel mills in Pittsburgh, the auto plants in Detroit, the textiles and furniture manufacturers in the Carolinas.
Oh, God,
Plants,
the town I grew up in, Lexington, North Carolina, we had at least 5 that I can just name off the top of my head, furniture manufacturers. And within a few years, they were all closed. And Lexington's at that time, 30,000 people. I mean, it devastated that area.
yeah, it's a tenth of that now, maybe a little
Mhm.
more, but it's greatly reduced. Jobs never came back, plants never
Mhm.
reopened, people left. It is a shell of that now. I've been
Yep.
there a few times. Um, I mean, it was so bad that in some places whole towns were gone, whole towns vaporized. There was
Mhm.
nothing there to keep anybody there. No money, couldn't afford it. Whole towns gone.
Well, if you remember,
Just,
Detroit was almost a ghost town
yeah,
for a very long time.
decrepit, run down, just a shell. Well, the study went on to say that for every $1,000 of Chinese imports per worker in a local area, Wages dropped, unemployment spiked. Folks either left the workforce or, leaned on getting disability checks. Hit middle America like a gut punch, a sucker punch. Now, free trade was the gospel. You had Clinton, you had Bush, you know, everyone bought in.
Now, when you say
Problem
free
is
trade, do you mean fair trade or free trade?
free trade. That was
Meaning,
the mantra. That was the mantra, free trade. Only problem is China played the game a whole hell of a lot better. They used things that heretofore really hadn't been an issue. They used subsidies. They used cheap labor. And when I say cheap labor, think of slave labor,
like
not
50 cents an
low
hour,
price labor, but
right?
literally slave labor. They kept their currency artificially low, which made their exports cheaper and made imports into China much more expensive. They had high regulatory hurdles at selling products and for outside retailers gaining access to their markets. Plus, they demanded intellectual property from manufacturers. How did you manufacture this? What does it consist of? How do you make it? The manufacturers had to give them everything if they wanted access to the Chinese market. Well, what did the Chinese do with that information?
Replicated it and sold it.
Replicated, sold it using subsidies to undersell the American manufacturers,
Hmm.
put them out of business, and then jack their price up. It was just a formula repeated over and over and over again. The Rust Belt paid the price. So when Trump starts yelling about tariffs, he's not pulling it out of thin air. He's tapping basically 200 years of history and 20 years of hurt. So don't forget that. Now,
Sorry, funny
Trump's back
picture.
in the White House. I couldn't resist. And he's swinging the tariff hammer like it's Thor's Mjolnir. The Thor's hammer. Mjolnir. I just like saying that. My Danish is not great, but it's just, some of their words just kind of roll. And the name of the hammer was Mjolnir. And if you're Danish or speak Danish, you're probably mad at my pronunciation. So uh, I'm reasonably close. Anyway, he's swinging this hammer like Thor's hammer. And he's been talking this game since the 80s. He's consistent. Well, now he's in a position to do something about it, and his latest moves are big ones. He signed an order on February 25th, putting 25% tariffs on Canada and Mexico. Of course, that raised a stink. It also added 10% on China across the board. It did exclude Canadian energy, got a lighter rate of, I think, 10%. And then this week, what really caused all the sound and fury was he upped the ante, 54% on China, 24% on Japan, 25% on South Korea, 32% on Taiwan, 20% on the EU. So some pretty big numbers on most of our trading partners. Now, some people will say, well, he didn't put anything on Russia or North Korea. And the implication is that he's showing them favor. Well, the simple fact is that there are sanctions in place against both of those, and we have no trade with them. So there is nothing to tariff.
That was what I was going to ask you about, sanctions, and how does that play into this?
Yeah, she told me earlier she was going to throw me a curveball. So,
It was sanctions.
yep. So there's no favoritism being shown there. It's just practical reality. There's nothing to tariff because there's no trade that's legal or authorized. Now, people go, this is unconstitutional. Article 2 doesn't include the powers to increase taxes, which, people argue, and probably rightfully so, that tariffs are a tax. It's a little more complicated than that, but in terms of the legality of it, he actually does have the power. Congress passed a bill granting him the right in certain economic emergencies, certain crisis states, certain conflicts, to levy tariffs on countries who are hurting the U.S. And so he is basically calling this an economic emergency. And he points to things like fentanyl flowing into the country. He's leaning hard on China and Mexico to stop the flow of fentanyl, excess immigration, trade deficits, you name it. I mean, Trump is anything but subtle, but he's busting some anatomy with these tariffs and his demands. Now, just looking at the China piece, for example, which is really kind of the Rust Belt's old nemesis, that 54% tariff that he put on them, it's a beast, an absolute beast. It's the highest since Smoot-Hawley in 1930, which didn't end great, but we'll get into that.
Okay, who is
China's already,
Smoot-Hawley?
huh?
Who is Smoot-Hawley?
Smoot-Hawley was a tariff passed by Congress in 1930. And a lot of
Okay.
people say that it kicked off the Great Depression, which I would argue, based on history and looking at a lot of other events, that it wasn't. That it was actually more the actions of the Federal Reserve. The Fed had some policy changes in the late 20s, put the country in recession. They magnified it by jacking up rates, hiking rates. There was a major bank failure,
That was
and that
my
kicked it off.
understanding. Yeah.
Yeah.
So Smoot-Hawley, that's not a person.
Smoot-Hawley was
That's
the tariff.
okay. And who did it tariff? Here's my curveball. I got a new one.
Got a new one. And I am not sure of all the parties involved.
Okay.
I don't know and I'm not certain offhand whether it was on all exports or targeted. That's a good question,
Okay.
but I am not certain. So I'm not going to throw
Well,
something
damn.
out. I know. I mean, you get what you pay for. Let's face it. What do you expect?
I don't pay nothing.
I know, exactly. That's my point. Now, as I was saying, China is already clapping back. It announced, a 34% tariff on U.S. goods, plus export controls on other stuff. What if they put export controls on like rare earth materials, things we need for batteries, phones, you name it? Canada and Mexico, they're prepping retaliation too. 25% on stuff if Trump doesn't blink. And I'm pretty sure Trump is not going to blink. The world is out there yelling trade war, and the markets are freaking out. The Dow
Yes, they are.
dropped, 1,700 points on Friday.
Hell,
JP Morgan came.
I freaked out last night I was like, dude, VIX is at 45. What is going on? As y'all know, that is my indicator. I've never seen it that high.
Yeah, it is. It's had a good week. Morgan says that, has raised their chance of a recession to 60% by year end. Strap in, people. So, what's all this mean? What does it mean, particularly for middle America?
What?
You ever combine words when you're talking? America, medical.
All the time.
So anyway, Jane, Western North Carolina has plenty of rare earth minerals that could be great for the economic recovery. Problem is, we don't want to mine it. There's because we don't like mining. It's unhealthy for the environment. It's a whole lot better for the environment if China does it, particularly when they have far less stringent EPA controls. So we still get to use the minerals, but we don't have to bear the guilt of hurting the earth.
However, since the floods this past, was it fall?
Mhm.
Now the entire area has been on fire. Yay. I mean, it's like you really don't want anyone to move back there, do you?
Yeah, I hope that the fires are close to getting contained. I actually haven't heard anything in days, but I hope they're
I
close to
haven't
it.
either. But I mean, there's already a company that has a contract to go and mine those minerals.
Yeah. Trump has been clear he wants to rebuild America's ability to be self-sufficient. The idea is that if a war did break out, we wouldn't be able to take care of ourselves. We couldn't produce enough antibiotics. We couldn't produce enough other drugs. We couldn't produce enough rare earth materials. We couldn't produce enough ships, planes, tanks
I think
because
you're
we
right,
don't have
Jane.
the capability anymore. So,
I think you're right, Jane. I think they want to get those rare earth minerals.
I mean, I'm sure everybody wants to get them, but um, they're valuable.
Hmm.
No line about that. But that is a focus of this administration is to try to restart some of that development and become or regain the ability to be self-sufficient in case of global crisis or, heaven forbid, a war. Um, I said something the other night that we get all of our drugs from China. Well, we don't get all of them. We get a lot of them. Plus, we get most of the precursors to those antibiotics from China. So if China did cut that off, we would be in a world of hurt in terms of not having antibiotics. I don't know what the exact, result would be. It would take us 6 months to a year to get the factories up to snuff. We'd lose ability to produce other drugs. So there would be a lot of casualties. I don't know how many actually. Um, excuse me. Now, if we look at Trump's argument for the tariffs, what does it mean for Middle America? He's pitching it as a lifeline to Middle America, and he's got some ammo in his gun. If you look at his first term, those 25% steel tariffs that he put on in 2018, well, it added thousands of jobs in places like Minnesota's Iron Range. Mills reopened, wages ticked up. For the first time in 40 years since Reagan, income inequality went down. Now, the left is always hammering the US about income inequality, which is kind of a bad measure anyway. Um, and you think, what's bad about saying, using income inequality measure? It's called the Gini index. Well, it measures the relative difference between the rich and the poor. And the US has a very big gap. There goes E Train. I think she's having some connection troubles again. So we are working on technology to get that fixed, actually get a hard line there, but it's going to take a hot minute for them to come out and actually install it. But hopefully soon that'll be corrected. So Income inequality, Gini index. The problem with that measure is that, for example, India ranks much higher on income inequality. That is, their gap between the rich and the poor is much smaller. So India has less wealth inequality. Is that a good thing? Well, if you look at their average rich person is poorer than our average poor person. So our poor are rich compared to people in India. And income inequality doesn't pick that up. It just shows the difference between the wealthy and the poor in that country. It doesn't pick up relative differences between countries. That's why I say it's not really a good measure. But if you're looking at the trend in the US over time, you can talk about that with some, reasonable basis. So for the first time in 40 years under Trump in 2018, 2019, income inequality went down. The poor, the lowest quintile, had more gains, higher gains in income than the upper quartile. And that's extremely rare since the 90s. In fact, that's the only time it's happened since the 90s. A 2024 study on Trump's tariff said it strengthened the economy. $10 billion in new mill investments, new manufacturing investments. Now, he's been in office, 70 something days, 74 days, 75 days. And so far, he has received over $5 trillion in new investment commitments since taking office. $5 trillion. Now, this compares to Biden's last year of somewhere around $100 billion. It's kind of hard sorting that out because a lot of it is closely tied to government contracts. And if a private entity is investing money and part of it's paid or incentivized by government contracts, that's a little different. Trump is not promising any government contracts to this $5 trillion group. They get no more, no less than any other, competitor of theirs. So $5 trillion in new investment is absolutely massive. It's incredible, actually. One caveat with that, and I'll be honest, we don't know where that $5 trillion is going yet. Is it going to the Rust Belt or is it Silicon Valley? Apple has pledged $500 billion to build new plants here in the country. Some of it, they have some facilities here in North Carolina, some in Texas, some in California. Will they stay to those states, 2 or 3 states? They probably won't build much more in California, honestly. They're not overly enamored with some of the things going on there. Or will they spread to diversify more around the country? Don't know. So don't know if, how much exactly will help specific states. The jobs are going to be where? Don't know. We'll see. But $5 trillion, I'll take it all day long, all night long. So back to the China shock legacy. The 54% tariffs are aimed at stopping a second shock. You see, right now, China has a lot of overcapacity. They have too many cars, they have too many solar panels, they have too much steel, and their economy is wobbly as hell. So they're dumping it cheap, think putting American manufacturers out of business again. Whatever manufacturers are left in some of these industries. Like China virtually wiped out American solar panel manufacturers. We were the first to make it. We were the biggest, the best in the world. Go into China, have to tell them how to make it, what we did, the process used to make them. What does China do? They start making them. They start selling them in the U.S. at subsidized prices, undercutting what Americans can sell. The Americans go out of business. Then what does China do? raise its price. Have you tried to buy a solar panel, lately, or outfit your home with solar energy? It's expensive as hell. So anyway, that's uh that's part of the idea, to keep them from dumping here in the US. Now, Biden tried to head some of this off with 100% tariffs on Chinese EVs, electrical vehicles, last year. But Trump's, taking it and just going nuclear. The idea is to keep that flood of goods out to protect what's left of US manufacturing. Now, Rust Belt workers are cheering. Think Toledo auto workers or Pittsburgh steel guys. But it's not 2001 anymore. China is the biggest threat, but they're not the only game in town. We're buying, this kind of stuff from Mexico, from Vietnam, as well. And part of that, I think, honestly, is China, in order to try to escape some of these tariffs, is selling their goods through some of these smaller countries. People are like, well, why does a country like Vietnam have a 50% tariff? Because Vietnam doesn't do much trade with us. Well, it's because China is starting to use them to evade some of the tariffs. So what do? You put tariffs on products from that country as well, which makes sense to me. In terms of, China hurting, keep in mind, China's down to about 14% of our imports from about 21% in 2017. That's part of their problem. And one of the reasons why they want access to US markets. Now, the thing is, with the Biden-Trump tariffs put in place over the past 7 years, this is what I'm talking about in terms of China shipping its products from other countries to try to avoid the tariffs. So that's why some of these small little countries are getting these tariffs. Most people who laugh or say that's stupid don't understand the reality of what's going on in the world. Now, if you listen to the show, you understand. Excuse me. And I've seen several people on the internet, on our interwebs, use the example of the iPhone, saying, hey, now your beloved iPhone, could hit $2,300 from $1,600. Well, that's just wrong. That's bad wrong. The key is many of these phones are assembled in China, but increasingly, manufacturers have been moving plants out of China to India, to Vietnam, to Indonesia. And many of the phones now are assembled, big word, assembled in Vietnam and India rather than China. Both of which have entered into negotiations, immediately after Trump's announcement. They've entered into negotiations to remove their tariffs and get the tariffs on them removed. So, and that's what Trump wants. He wants people to remove their tariffs and penalties and give access to U.S. goods. Now, obviously, if they're fronting for China, the tariffs on those items may not be removed. That'll all be part of the negotiation. But that's what Trump wants. He wants negotiations. He wants people talking. And his point is he wants fair trade. Free trade has been one-sided, where the U.S. is the only one with relatively open and low tariffs. We have the lowest tariffs among the G20 by far, not even close. U.S. goods are taxed, tariffed, regulated at far higher levels than their associated exports to the U.S. So Trump is like, we need to be fair. We want to be treated fairly. Now, in terms of the phones also, one reason why inflation didn't take off in 2017, 2018 with the first round of tariffs was because, most of the imports affected were from China. Well, China devalued their currency. They lowered the exchange rate for their currency. So they basically, by doing this, ate the cost of the tariffs because they couldn't afford to lose US business. So, think about it. You've got, 10 yuan to the dollar. Well, if they devalue their currency 30% to 7 yuan to the dollar, they get fewer dollars for each good they produce. But the cost to the US consumer doesn't change if there's a 30% tariff. So this is one of the tricks that China has played in trade, since the 2000s. They manipulate their currency to give them advantages in markets. They'll peg their currency to other currencies like the dollar so that it doesn't fluctuate or move, and they can maintain that advantage in terms of exporting goods. Now, also on the phone, another thing to consider is that many of the most expensive components are made in the US. Some of the chips, the Gorilla Glass used for the screens. Well, any component for any good that's imported into the US that was manufactured in the US, those components are not included in the tariff calculation. So that's another aspect. If they make the parts in the US, assemble it in somewhere else, then the cost of those parts is not included in the tariff. Another incentive to get them to manufacture things in the US. So the tariffs exclude the value of American-made components. There's also the fact, people worrying about the tariffs on China. Well, it's really simple. If China quit using slave labor, quit pumping fentanyl into the US, quit demanding intellectual property, quit taxing, restricting US imports, their tariff rate would drop to zero. It's really relatively simple. Next question. Now, looking at, for example, cars from Japan or Korea, for example, same story. American-made components aren't taxed. Cars from Canada, Mexico, American-made components are not taxed. Now, South Korea and Japan have already stated they want to negotiate, in addition to India, Vietnam, several different countries, which is exactly what Trump wants. Gas, energy prices. Oil has dropped 25% in price over the last week or two. And so you'll start seeing it at the pump. Melissa, except maybe in California, where your gas taxes jumped to 60 cents a gallon and where the state board just voted a month or two ago to increase the low carbon fuel standards. Obviously, they want to prevent climate change, so they're making the gas more expensive by demanding it meet higher standards. Canada's oil might dodge the worst, but supply chains are going to be confused for a little while. Stellantis has just laid off workers in Canada and Mexico. They've also stated they're going to move more production to the US. GM has announced it's increasing production in its US plants, effective immediately. So, the net effect of all this, inflation's already at 2.9%. Now, surveys show consumers expect 3.3% with the tariffs, per the Michigan survey, which is hardly ever right. But history does give us some insight into the impact of these tariffs. And remember, the tariffs can be, the effect of the tariffs on inflation can be muted by countries devaluing their currency, like China. If you look at the yuan, it's already started to drop the past few days. Now, Trump says, and has said often, that foreigners pay for it. Many others argue that American consumers pay for it. It goes right to the inflation bottom line. And if that's true, then middle America's paycheck, being already stretched, could feel it, would feel the sting. But let's look at history. How did the first round of tariffs do in 2017? Well, looking at the annual inflation rates when Trump first came into office, now Obama's last year inflation was 2.1%. So Trump takes office in January of 2017. The inflation for that year stayed the same, 2.1%. But the tariffs started being put in place in 2017. What happened to inflation in 2018? Well, it actually dropped to 1.9%. How about in 2019? Well, it remained relatively stable, went up, but 2.3%. And remember, in the last quarter of 2018, GDP was growing at 4%. Remember, under Obama, his last, quarter or two, GDP was at 1%. Remember him talking about the new normal, 1% GDP, sorry, 1.5% GDP was the new normal. What did Trump have? A magic wand? So inflation actually went down after Trump implemented the tariffs, and the economy grew more than double what it was when he took office. That may give us some insight into what we can expect. Inflation was down and the economy grew almost twice as fast on average. Now, the world's not sitting still, not going to imply or argue that it is. China is pivoting. They're pushing what they call their Belt and Road, trying to sell to Africa and Europe. And they have leverage on us. We need their stuff. We need their rare earths. We need, some of their ability to assemble. It'll take us a year, 2 years to develop some ability in those areas. Canada, their GDP could shrink 2.6% if these tariffs stick, according to the Canadian Chamber of Commerce. And they're our biggest trade buddy. I mean, it's a little bit of a mess. Trump is betting big that it'll boom our economy. Now, the first term GDP grew for the whole period at 2.75% pre-COVID. Tariffs didn't tank it. It still grew from when Trump took office. But the tariffs weren't near the scale that we're seeing now. They weren't as widely applied as what we're seeing now. So that's a little bit of uncharted water, not going to lie. For the Rust Belt, it's a little bit of a gamble. Jobs versus cost. So, if you look at implications, if you want to talk about the implications, Middle America has been the punching bag of trade for decades. Like I said earlier, 90,000 plants have shut down since the 90s. Millions and millions of jobs with them. Towns like Flint, Youngstown, Lexington, they're shadows of what they were. Trump's tariffs are a swing at fixing that. But, if it's a haymaker, there's no guarantee that it lands cleanly. Now, the upside, if the tariffs stick, they could and probably will spark a manufacturing bump. Steel's a clue. First-term tariffs cut imports by a third and boosted domestic output. Now, if that $5 trillion in commitments hits Ohio or Indiana, you'll see factories humming again. Auto jobs in Michigan is possible. Particularly if car makers are ditching plants in Mexico and Canada, Detroit's got some, good sites available. A 2024 study pegged a 10% global tariff imposed by the U.S. growing GDP by $730 billion, adding 2.8 million jobs. If you scale that to 54% on China, the Rust Belt might get a slice of this. So middle class wages, bottom line, could climb. You'll see about a 5 or 6% household income boost on average, according to this study. So for the average Joe, that's real. The average middle class family seeing a 6% income boost on average, that's real. That's real money. That's a real impact. Now, a lot of people have argued this is all chaotic, which, kind of makes me laugh a little bit. Our Treasury Secretary was a macro being large scale economics. Micro is like household. Macro is like national and global economic theory. Well, he was a macro hedge fund manager, so he's very attuned to international economic issues. He understands liquidity, global liquidity, national liquidity, market liquidity. And he's got a strategy. I just got to laugh when people say there is no strategy, just chaos. Well, they just don't know what they're looking at. His strategy is to lower the three major economic foundations for economic growth: the value of currency, interest rates, and energy cost. If you are able to get all of those down, make them cheaper, that simply sets the stage for another strong or even extremely strong period of economic growth. Something that has been needed for years. We haven't had a strong private sector in 6-7 years. It's not going to be easy or a quick road. Biden hurt U.S. oil development. For 3 years, there was no new investment, no new money put in development or discovery. So there is no inventory of wells waiting to pump. Every pump we have is pumping. Current acreage is down and of lower quality than it has been in 60 years. Few, if any, new wells have been started over the past 3 years. Biden killed all that. He took whole regions out, closed them off to development and exploration. We haven't had any new nuclear development or energy started in 30 years. Solar and wind continue to fail and are extremely expensive sources of energy. We talked about, months ago how the state of New York and my numbers are off a little bit, but you'll get the gist. You'll get the idea. They signed a contract with a Dutch company, not an American company, a Dutch company, to build windmills off the coast. And they gave them a guaranteed contract. They will pay them $150, $160 per kilowatt hour of energy generated. Well, the average cost right now in New York per kilowatt hour is about 30, 35. So they're going to be paying nearly 5 times the amount for that energy. So adding to the cost of energy, not only are solar and wind not green, they are far more expensive and far less reliable. It's just a bad combination all the way around. Now, people like to kind of take pride in a strong dollar, and I understand kind of the pride aspect of that, but the practical reality is that a weaker US dollar helps US exports. It's better for our economy. It makes foreign goods more expensive. And having a strong US dollar has hindered US trade and capital inflows. So the dollar needs to be stabilized at a more reasonable rate. And this is tied to interest rates. As rates come down, the dollar weakens. And, we've talked about this before. There is a big, huge lurking problem out there. And I've talked about this a couple times before. The Treasury is having to issue $14 trillion in new debt this year. It's going to be 6 or 7 trillion in June alone. Now, normally it's 3 trillion a year. We're going to be doing $7 trillion in 1 month and 14 trillion this year. So that kind of supply is going to drive rates higher. But the idea is, Trump understands, if they can get the rates down now, start off at a lower rate, well, each basis point drop results in about $1.4 billion in lower interest payment per year. So to do some math, the 10-year Treasury bond, which is kind of going to be representative for the average maturity or duration of the new Treasuries issued, the 10-year bond has already dropped 90 basis points this year. That alone, if it doesn't drop any further, that's a savings of about $130 billion in interest a year. That's how massive our this new debt issue is. $130 billion in interest per year per basis point. And a basis point is 1% of 1%. There's 100 basis points in 1%. So $130 billion in savings per year for each basis point. 10 years down, 90 basis points. That's $130 billion in savings. Now you multiply that by a 10-year period, $1.3 trillion in interest savings. That's real money. That's why there's such a desire to try to get interest rates down as far as they can before all this Treasury issuance starts flowing. Energy cost. So we've got, working on weakening the dollar, lowering interest rates, energy cost. Oil so far this year has dropped 25%, and it'll go lower. Everyone's economy has been slowing. China's is in the tank. Europe's is dying. U.S. private sector has been stagnant or slowing for a year. So demand is down and dropping. Now, I'm covering this. If you have any questions or comments or something doesn't make sense, let me know. If you're on Rumble, if you have a question, you need to go to YouTube, our YouTube channel, and ask it, because questions, since E-Train is off, she would forward your question. But the service we use, StreamYard, doesn't connect well with Rumble, so we don't get the questions. So you have to go to either X or YouTube for me to see the question. Sorry about that, but hopefully E-Train will be able to get back on if she can get her internet back up. Like I said, she's had some issues with it for several weeks. Everybody's focused on the market dropping. And, I don't know if you can see these numbers, but the year to date, the Dow Jones is down about 10%. That's a correction. S&P is down about 14%. That's a correction. NASDAQ is down about 20%. That's a pretty damn strong correction. And they're not done yet. It's highly likely that some of this will continue. For how long? My crystal ball is not perfect. I don't get into specific dates and times. I look for some sort of change in sentiment. There's a certain attitude called capitulation. And so I look for signs that, investors are starting to capitulate, like I'm done, I'm out, I'm losing everything, I just, give up. That's normally about the time that the market is close to bottoming. And that's the time when I'm going to be, investing like crazy. I've been in cash for months. So I have actually been, I don't want to say looking forward to this, but believing that it was going to happen. Now, Trump's tariffs are just the incitement. They're just the ones to kick it off, but it has needed to happen for quite some time. I've told you for over a year that the market was in a bubble. I pointed out how Buffett and Druckenmiller were selling risky assets, converting to cash. Last quarter, Buffett hit his largest cash position in history, selling off stock. We talked about the Buffett index being at all-time highs. We looked at a number of different indices and signs that the market was overvalued in a bubble. So I didn't have any doubt that the market was going to correct. Didn't know exactly when it would start. Trump may have pricked it, but it was going to happen sooner or later. So here's where we are. And this, if you can see this chart, it goes back to 2019. So here's the COVID drop, and then you see the increase, and then you see, Bidenomics at work here in 22, 23. The market didn't go anywhere. And then you had the 24 with AI. And this really is almost all AI. The market as a whole didn't move that much, but AI, the Mag 7, blew up. But the point is, you look at the drop here. Nobody was, doom and gloom during this time. Even the COVID drop, nobody was doom and gloom. But now you get this little drop after rising this much since 2018. And people are like, it's the apocalypse. It's like we're in the middle of a 100-year famine. This is insane. This is not insane. This is not a reason to panic, particularly if you're an investor. Now, the big picture. Lower yields ease the debt burden. That's huge. Spending cuts that are also being undertaken help introduce some fiscal discipline into the government, which is desperately needed. Geopolitics are being reshaped, hopefully in our favor. There's a lower chance now of World War III than there was 3 months ago, 4 months ago. We'll save $150 billion a year, slaughtering Ukrainian and Russian men. Tariffs will likely jumpstart domestic growth. The investment committed will jumpstart in domestic growth. The $5 trillion, which companies are starting to invest now. It'll be over the next several years, but it's starting soon. And if there's a correction of some size, market risk is reduced. I've been very cautious of the market for a year and a half because the valuations were getting stupid. So if there is a good cleansing, market risk is reduced. You can focus, maybe the market will once again focus on cash flows, and it sets the setting for a strong economy, which would ignite strong but not excessive returns. And that's the best way to invest. This is this is kind of, my view on where we are in the market, but it's using a pretty graph. This is the Buffett index, which he basically takes the value of the Wilshire 5000, a very broad stock market index, and divides it into GDP. And this dotted line is the historical mean, the average. Now, what you see is this is where we are now. If you can see this little golden line, But as of, a month ago, month and 2 months ago, this Buffett index was at 200%, an all-time high. So when I talk about being overpriced, this is one major index showing how overpriced the market was. And if you're going to buy stocks, invest in stocks, cheaper is better. People say, hey, the market's dropped $11 trillion since February the 19th. And you think, that's horrible. Well, see that little bitty line there, that little bitty drop there? That's how much it's dropped. This is how much it's, not how much it's gained, because this is a relative measure. This is a measure of overpricing. When it extends past 150% of this mean, that's way overpriced. We got up to 200%. We're still at about 180, 185. In terms of the value of the market, people say, it's dropped 11 trillion since February the 19th. Well, they ignore the fact that the markets have grown 11 trillion since last November. So you have the same value in your accounts you did 4 months ago. That's not devastating. Nobody is devastated. And if if you're still buying, if you're still investing in the market, buying at lower prices is better than higher prices. It's that simple. So even if you're investing a fixed amount every month, like in your retirement plans, you're getting more shares at a lower price. That's a better deal for you. So this is not all bad. This is not horrible. Now, if you've been watching, we've been saying for several months that chaos was coming, that stocks were way overpriced using, most any metric you want to, intrinsic valuations, forward PEs, the Buffett indicator. I could go on and on. Many of these had reached all-time highs or near all-time highs. They still show stocks as being significantly, historically overvalued. There's been a lot of warning signs. And that's what we focus on this channel, is trying to give people a better idea of where the market is. Is it a good value? Are there warning signs? What are the experts saying, thinking, and doing? That's our channel. So bottom line, this just simply is the function of a market that is just correcting excess. Enjoy it. This is the result, ultimately, of Trump prioritizing Main Street instead of Wall Street. It would have been very easy for him to maintain the status quo. Keep borrowing money out the wazoo, keep government spending, and just keep going along to get along. But the practical reality is we were borrowing more than GDP was growing. Just government debt. That doesn't include private debt, which has been soaring. Our whole economy right now has been kind of at a precipice, a risky point. I've kind of, even on the show, sometimes wondered if we have gone too far, if it's kind of like a point of no return in terms of ever having a vibrant economy again without a major bloodletting. So I'm hopeful that we've got a chance, but I'm not guaranteeing anything. Couple things. Comments here. Jane, hard lines are expensive. It costs $10,000 to run to my sister's farm. Yeah, I don't know what the holdup is. They've got a hard line that's not far away, so they just need to run it to the house. So it's not going to be that much, but we'll see. Jane, I'll watch Rumble for you. Thank you. Appreciate it. That helps. And then Julian, can you compare a similar graph to PE ratios over time? I can't do it right now because it's going to take me a little time to get the data and then construct the graphs, but I will make a note. P ratios, historical. So thanks for asking. I'll try to get it taken care of. Probably have it on Tuesday night's Q&A. So, um, but yeah, there have been many warning signs over the past few months. This is just a normal, healthy market correcting excess. Now, I have a stake in Wall Street, worked on it. I realize, though, we have an economy that if you're not in finance, if you're not in real estate, and particularly on the coast, you haven't done well investment wise or wealth accumulation wise for 20 or 30 years. I have a stake in Wall Street. I'm familiar with it, worked on it. But I realize how thin that veneer is without a solid base underneath it. Our country cannot prosper off finance and real estate alone. We need a healthy and a vibrant middle class. We absolutely need a lower class with hope of a better future that is upwardly mobile or has opportunity to be upwardly mobile. We'll have neither of these. We've had neither of these. We will have neither of these if we keep the status quo. I don't guarantee that Trump's and Besace's plan is going to work. I hope it does. I'm rooting for it too. There's some risk, but there's the ability to adjust it too as some unknowns arise. And I think they have a number of different contingency plans available. Most of the reaction, everything we've seen so far, they've expected. Nothing unusual, nothing unexpected. But there's room and opportunity for adjustment. Now, China obviously is a big focus with all this, and I just wanted to throw this out real quick. I always talk about when you see big events occurring, I talk about primary, secondary, and tertiary effects of major events, major actions. So let's briefly look at the tariffs with regard to these, primary, secondary, tertiary effects. Focusing on China. China's economy, as I say, is just in the dumpster. It's in a deflationary, recessionary state now. Their PPI, one of the inflation measures, has shown prolonged deflation, which is the worst possible scenario for central banks. Deflation, that's where asset values, real estate, all types of real estate, commercial, residential, multifamily, all drop. Stocks are dropping. Housing in China is still in the tank. The youth there cannot find jobs. Many are not being paid. The underemployment, the under 30 unemployment rate is around 30%, according to some estimates. Exports continue to decline. As a share of GDP, they're now around 20%. The U.S. imports have fallen from 24% to 13% of our imports. We're now importing more from Mexico than we are China. FDI, foreign direct investment, the amount of capital flowing into the country from international investors. FDI in China is absolutely imploding. Absolutely imploding. And what do I mean when I say imploding? Here is a beautiful picture. This is the amount of foreign investment in China going back to 1998. And you can tell through, early 2000s, there wasn't a whole lot. As China's trade started getting recognized, you see, foreign investment increasing. peaking around 2014. And then in 16, 17, it trended down. 18 bounced a little bit. 19 down. In 2021, 22, it jumped up significantly. But since then, it has had a pretty significant downward trend. Remember, some of the effect of Trump's initial tariffs on China was to initiate the process of moving manufacturing out of China into Vietnam, into Indonesia, into India, back to America, all over. Well, that trend continued. And, within a couple of years of starting, these manufacturers had other plants built and ready to go. So they started shutting down Chinese manufacturing plants. So, and new investment has actually turned negative. Instead of investing, investors are withdrawing money. Turns negative for the first time in 25 years. So investors, and this only goes through 23. We don't have 24 numbers yet, but it will be even more negative than that. So investors are withdrawing money from China for the first time in 25 years. Now, China, don't believe any of the numbers they publish in terms of, economic performance. They double, triple, quadruple the numbers, whatever. They've had low or no growth for a decade. So don't believe any of the numbers they publish. Now, there's also the impact of Trump trying to lure Russia out of China's realm, orbit, circle of influence, whatever you want to call it. Biden did everything he could to push Russia away and make it an enemy. And some people are still absolutely convinced that Russia is the same as, as the communist Soviet Union, still an enemy. But the idea is we'd be better off not having to face direct enemies in China and Russia working together. That's 50% of the world's population and potential markets and oil and natural resources. Russia has a ton of oil and natural resources, rare earth materials, et cetera, et cetera. We would be better off, they would be better off if we had at least an amicable relationship instead of on a war footing, both, with their fingers on the nuclear trigger, which it was getting a little dicey the past year. So having Russia strike a more balanced position would be to our benefit. It would be to their benefit. Putin wants Russia to be strong. Every leader wants their country to be strong and respected. That doesn't bother me. But that's more likely to happen with good relationships with the U.S. than just with China. Demographically, China's screwed. China is screwed. They'll probably collapse in 10 years. They have a rapidly aging population and a shrinking workforce, and that shrinking workforce can't even find jobs. A lot of them aren't getting paid. So, within 10 years, you'll probably see a return of extreme poverty and hardship for China. Likely be even more intense military control. And it'll increase as the population becomes more and more contentious. When people really start to riot or try to overthrow government, is not when things are getting better or getting better slowly. It's when things stop getting better. Now, the Chinese have, had an improvement in lifestyle, living standards for the past 20 years. Largely we've funded it. But when that stops, there's going to be issues at home. So it's not hard to project that, military control will only increase as the population becomes a little bit more contentious over their lack of a future. It's no different than, the inner cities of our big cities. There's a lot of anger, frustration, even hatred because they have no hope of anything better. and they resent those that do. And I don't blame them. We have robbed them of hope. But China, the tariffs put a crush on China, one that it simply cannot stand for long. So here's where I see some secondary effects coming in. Obviously, the primary effects are, loss of cash, loss of trade, losing manufacturing, even more accelerated loss of manufacturing capability, foreigners moving plants out of China. Secondary effects will be, China will move to try to negate some of the effects of the tariffs with both fiscal and monetary policies, kind of like they did in 2018. They don't have much choice. Now, we've seen reciprocal tariffs announced, but that doesn't hurt the U.S. much, and it doesn't help China any. So the likely outcome is basically negotiations where China halts the flow of fentanyl, and there's a deal to strengthen the yuan against the dollar. China has to stop pegging the yuan to the dollar and allow it to float. In exchange, China will get some tariff reductions. Now, if that were to happen, it would continue to add to the deflationary pressures in China, but they don't have any options. This would lead to easier monetary policy in China as well, possibly a burst in fiscal policy, a stimulus, so to speak, as we would call it. That would buy them some time, but it will only ultimately enrich the bureaucrats and the rich, the same as the policies done in the US and Europe for 20 years. That won't satisfy the young, who have a heavier and heavier tax burden to pay for it and to pay for the increasing older group. That's how countries go broke. That's the tertiary effect. So over the next 10 years, there's going to be some significant economic shocks for China and for its trading partners. You've been warned. Uncertainty will grow. And remember, the markets interpret uncertainty as risk. So the more uncertainty, the more question marks they have about what's going on or what the future is, that's risk. And that scares the markets. And we all see how markets react when they get scared. The markets go up slowly. They come down quickly. You've heard me say that 50,000 times over the past couple of years. That's exactly what we're seeing now. So this will further cause capital to flee China and likely towards, some of its neighbors in Pacific Rim, India, and likely more towards the U.S. if we can keep from imitating the same mistakes and if we can get our own house straightened. We'll see. I have hope, but we'll see. There's still a lot of work to be done. Anybody have any questions? I have missed E-Train. She is valuable to the show. I know you have missed her too, so I will extend y'all's regrets. She's she gets a little irritated with her internet, but right now it's just not a whole lot she can do about it. But like I say, things are in the works to get that fixed. Julian, I appreciate the question. I'll try to get that answered for you. If any of you have any other questions, feel free to email me, moffatonmoney@gmail.com, or DM me on X, moffatonmoney. If you will, please, before you go, hit the like button. That helps, the algorithms, recommend us a little bit more. Helps our audience viewership attractions. Jane, it's part of living in rural America. Yeah, not a fun part. There's a certain peace and quiet available, but when you want your internet, when you need your internet, that kind of sucks. So, but hopefully that'll be remedied soon. At least she has power. Yes, she does. And she's got her little generator in case it goes out temporarily. So she's she's pretty well set in that regard. So we can be happy about that. She's in a good place. She's safe and doing well. Y'all have any other questions, comments, thoughts? Let me know. We'll be back Tuesday night for Q&A. So if you've got, some things you want to ask, that's a good time to do it. I appreciate you joining us tonight. That's really all I've got, for tonight. Went a little bit faster than it does without A-Train throwing out stuff. She's good at that. But I appreciate y'all being with us tonight. Hope y'all have a great rest of the weekend, and I'll look forward to seeing you Tuesday night. Same time, same station. Thank you all very much. Our time is up. We thank you for yours. Good night, y'all.